Hello, everyone. Happy Tariff Monday. How's everyone doing today? Hope everyone had a wonderful weekend. So let's see who's here. Good morning, John. Let me get some of this off there. There we go. Let me move around a couple windows. Some house cleaning stuff. All right. Lots of tariff news. In case you were wondering what was going on with the markets, but you should be well prepared. Thank you for putting in all the news. Sterling in here. Good morning, Mark. Good morning, Patrick. Well, good morning, Ted. Uh, what else do we have? Good morning, Jacob. Yeah, there's not a lot of earnings, but there's a lot of busy. What was I going to do? There's a lot of earnings this week. There's a lot of key earnings this week. Tyson Foods was a beat. Tyson Food beat. Good morning, Jacob. All right, let's get straight to it because there's a lot going on this week in the mornings. Well, I mean, this week period. And we have the tariffs 25% on Canada and Mexico, 10% on China. So we're going to see how long we're going to see. It's going to be volatile because could they last a week? Could they start giving exemptions today? Could, you know what? Who knows with Trump? So be prepared for volatility. Has any major level been broken? Not yet. The major levels, remember, we have some major potential double tops in place, but they have not been broken yet. So, and people are still wanting to buy these key levels. They're still going to, retail's still going to want to buy the dip. So let's just see if they rush in today or not. But we'll go through those levels in a bit. So far, the numbers this morning, uh, 15 minutes after the cash open, we have the S&P Global Manufacturing PMI numbers. Then we have the ISM Manufacturing at 30 minutes after the open, 10 a.m. Eastern Time. And then we have Bostic speaking and Musalim speaking this afternoon or this evening. Tomorrow, with the JOLTS numbers, not much going on. We got some Fed speak tomorrow evening. Wednesday, we have the ISM services numbers, and of course the EIA, then more Fed speak. Thursday, we have the initial and continuing jobless claims and more Fed speak. But the big day this Friday, and I don't know if I'll be able to live stream for it, is non-farm payrolls and consumer sentiment numbers. That's the biggest day in terms of economic news outside of what scrolls across the headlines, because it's all going to be headline scrolling with, if Trump says, hey, well, you know what, Canada and Mexico are really good people now, so I'm going to reduce the tariffs or something. They're doing all they can to stop what he's blaming on fentanyl and illegal immigration. So it's, who knows? And it's Trump. It's the Trump market trade. So that's going to be what's going on, which is key. Hey, Charles. Good morning, Heinrich. So it's got to stay on top of it. Now, so far, the market map, we'll just do a refresh again. The market map for this is pretty red. Pretty red. Oil's sort of flatter, but everything else is red. Big gaps down this morning. Your groups, everything's negative. The most positive of the negatives is energy, only down close to 60 basis points. Fed Watch still has one cut in June priced in, and that's it for the year. So a single cut in June at this point. So post-tariff announcement, we're at one cut in June and then hold. Fear and greed, this would probably drop into fear at the open, but right now at the lower end of neutral. And from a still a very expensive market perspective, 38 P to E, Schiller P to E. As Sterling said, not a lot of earnings this morning. He did put in Tyson, thank you. After the close, we got Palantir, incredibly overvalued, but can it keep going? We'll still see how things react after the earnings. But again, today's not the big day. Tomorrow we got PayPal, Spotify, Pfizer, Pepsi. After the close, big day after the close on Tuesday, AMD, Alphabet, Chipotle, Snap, if that's still a thing. But AMD and Alphabet, biggies there. Wednesday, we got Disney, Toyota, Uber, Boston Scientific before. Then we got Ford and Qualcomm after. Thursday, we got Lilly, Roblox, ConocoPhillips, Peloton. Before, after is a big one in Amazon. So that's going to be very key on Thursday. And Friday's not much. Friday's your small day in terms of earnings, but we have non-farm payrolls and consumer sentiment numbers. So we can't sleep in on Friday. What else do we have going on? So, bigger picture first. Start the week off bigger picture. Remember, we had double top territory. It's not going to give me any good new levels, so we're going to keep with these other levels. Double top, I should say potential double top territory, but the key is from the middle of January lows at 50, just remember 5,800. 5,800, that's what's key on the closing basis. So, other than that, the trend is still technically up. Now, we made, with this big gap down, we've made so far a confirmed lower high, and we have not made a confirmed higher low yet. So, we're going to have to see. Key level I'm watching today is this 59.84 area. We start going above that. I'm targeting the 4-hour rotation zone, just above 6,000, probably around 6,010 as this comes down into it. That's going to be the first key level. And there's a breakdown zone just slightly above there, 6,015 area. There's a key breakdown zone. So on any breakout, if we get a mad rush to buy after the open or shortly after the open, if the buy the dippers come in, that's the key area I will be looking for. On a breakdown area, the key level going into the open is right around this 59.60 area. If we go down below 59.60, you can use your minor harmonic levels. Let me show these levels. You can use these key levels right here to watch for minor levels, and I'd be watching 59.55. But below that, then I'd be looking at the key test of the overnight lows. The overnight lows just prior to the European Open. That will be the key area I'll be watching, especially down around that 59.40. If 59.40 breaks on a closing basis, 59.50 is very key. 59.50 would take us back below the 62.5 on the closing basis, which then I'd start watching for a retest of that lower area towards the middle of January. But if that holds that 59.50 level, it all depends if we get a bottoming pattern. Now, we do have daily cycles back to the bottom and weekly cycles at the top. So we have a mismatch in cycles still. I don't want to bring Joe Biden back. No. Now, Trump, if you like to trade with volatility, if you don't like to trade with volatility, you won't like the next bit with Trump. Because everything's going to be, he could come out today and change something with tariffs already. And if the market likes it, it could go screaming. And if it starts screaming above 59.83, we will see. We will see. So, I just had to look at something. NASDAQ, bigger picture, we do have a potential double in place. The key level to watch for the NASDAQ on a closing basis is the low of 20,694. So just below 20,700 is very key. And we do have daily cycles rolling over. And we might a little bounce, but this might be short-circuited. The NASDAQ might be getting cycles headed down. And the NASDAQ's more in. Yes, it does have a weekly potential double top, which is valid, but on the daily, you're at this key channeling area. What's interesting is the bottom of the channel if we were testing the bottom of the channel area, it would trigger the double, unless it was just a spike down and a quick rally back on the same day. So that's something I'm going to be keeping an eye on right there. In terms of the key levels, the key level I'm looking for right now is about 21,280 to the upside. 21,280, then the minor level is right around 21,360 to 380. And then the major resistance is 21,461. If we start breaking below the same thing, if we start breaking below about 21,150, The key thing for me will be 21,107 and then 21,066.50 on a short-term closing basis if we roll over after the open. Why 21,066.50? That's a 62.5. And if we roll over from there, my key level will be 20,984. So, again, the Dow, bigger picture, we do have a potential double in place. Also, long way off from potentially confirming or triggering. The trigger point would be a close below 41,967. By the way, when I've listed off all these key trigger points, they are on a weekly close. A daily close could be a front one run, but it has to close below there and followed by a weekly close. The volatility will make you bankrupt. Well, what I suggest in terms like this is you trade smaller and use wider stops and wider targets. Charles loves big red bars. So Trump at the helm and his propensity to create volatility in the markets, wouldn't selling options premium become a more profitable strategy going forward? When not now, not now. If you start getting elevated, really elevated VIX, yeah, but I would not be selling that crap out of options premium at this point. Because it's slightly elevated, but we're not really elevated. Now, if we start spiking up, above 30 in the VIX, above 40 in the VIX, that's when selling some premium could be really nice. I would not be rushing in to sell premium down here. I would not. I'd be looking to buy premium on dips because remember, even if you're wrong on direction, if volatility spikes, even with calls, if volatility spikes and you're on the wrong direction, it can help make up for some of the losses. I'm a fan of buying volatility down here when it drops back down, because volatility is going to be the key play as long as you have Trump doing this kind of stuff. Because who knows what's going to trigger the tipping point. I mean, the markets, you already saw what they did. And is it over yet? No. Now, buying volatility today might not be the key, especially if we start or snapback rally. I mean, the Russell's already come back down to that 2196 key level and bounce back off of it. If it wants to rally, I still see dip buyers coming in. I still see dip buyers. Back to the S&P, look where we are. We got the dip down from the DeepSeek. We've got the dip from the Trump tariffs. We've got the dips from the beginning of January. We got the dips from middle of December. We're in that same dip buying area. We still might see the dips come rushing in. The dippy dips. Back to the Russell. If we start taking out the highs, the very key resistance area is about 2275 in the Russell. Right down around there. The DAX, after hitting the harmonic, little gap down. Now pay attention to this. Is where I will really watch some key lows. This low that was formed on the 27th and the low that was formed so far today with the bottom of the rotation zone. Remember, the DAX has been pulled away from the weekly rotation zone. So we start getting back down there, we could easily return to about 21,000 in a flash of an eye if we start breaking today's lows. We have the potential this got very sloppy. I am taking this off because it's now turned into a horizontal. And we still have the declining neckline. Now, this is more a rush into safety than, which will lower rates a bit, but it's not, because tariffs are technically, if they stick around, inflationary. So you can look at the yields, though, are pulling back, but that's more a flight to safety. And the 10 years never triggered the double bottom, and now that's also invalidated. So, but we're still holding the 50. Again, it's going to be interesting to see how this plays out, whether the sloppy horizontal neckline head and shoulders stays and we get the bigger pullback, or whether starts getting the rush back out of treasuries because of inflationary perspectives. Now the dollar index, remember we had the percent B buy, which now is followed through, ticking off the 87.5, putting it in potential double top territory. But for me, it stays in bullish mode unless we close and trigger that weekly double. You can see here that big weekly double, which would be out of the way. So now these tariffs are bullish for the dollar. We've got a little pullback so far. So I will be watching for a rotation thing back up, but I would not be looking for any key shorts at this time, even if it does manage to fill the gap on the DXY. So what else do we have? We have crude. Crude, we had the double trigger. Had the double trigger. And already hit the second target. This was nearly impossible to trade on the 4 hour, because even on the 1 hour, because the trigger point technically happened after it hit the second and third level. I'm just keeping this on for targets at this point. So also watching, because Friday set up a percent B buy. So if we do close above Friday's highs, that's where I can keep watching for those key levels to the upside, because we are getting cycles turning up. Where does this sit in relation with the harmonics? And look at where that final target is, right at 50% harmonics. So that would be a very key level to watch for, this 75-70 area. Okay. Little bounce up with this in natty gas. So I'm going to be watching to see if we get another rollover in this, but we have cycles at the bottom, so I'd be patient in this. We have not even hit the second or third targets in that. Gold, after a brief spike down, holding up still. I'm going to be seeing if we can take out the key high area in the futures from Friday. And then the next target is 28.83. Now, in the big perspective, yes, there is a massive double top, but probably will never trigger. What else? What else? What else? Let's just see. The yen spiking up through the trend line, not triggering double bottom. If this rolls over again and comes back down to retest Friday's lows, the little mini potential double bottom will be off the table, and we are still against the rotation zone. That was the only bullish play in the short term. It has not technically been validated yet, but it may today. Euro, the only thing now, besides a short-term potential little gap fill based off the tariff reaction, would be, I'm still watching for rollover plays. I'm still watching for the euro to hit parity. The only thing that would change my mind is if this weekly double, this is now a weekly potential double, were to trigger, because then it would be out of the way of the weekly rotation zone. So that would also mean a substantial dollar pullback. That's the only thing that gets me bullish on the euro, besides any scalpy things. Spiders, going to be interesting today, because this is a technical double top pattern, but it would have to close. Watch for the spiders, how it closes below, how it closes in relationship to last Monday's lows, the 27th. Those lows, 594.64. If we close below that, we've technically triggered a little mini double top in the spiders. All right, which could retest the 87.5 harmonic. Look where the final target is for that. If we snap back and stay above, right now we're at 592.28 pre-market. So if we rally back, really watch in relation to 594.64. That's what I will be watching today. And those targets to the downside, if that were to trigger, were 586.98 and 583.15. Would that trigger? What's interesting is, even if that does trigger, and it is against a weekly rotation zone, it does not trigger the bigger potential weekly double top. So could the minor one be triggered and not kill the overall bull market? Yes. The Qs does not have a little mini potential double top because the targets go below the lows from Monday the 13th. So what I'm watching though is still to see if we get a downwards close again below about 514.50. Okay, and then the targets for me would be about 509.70 and 504.63. And remember, we still have a key gap left behind down here. Other than that, if we still hold these lows, then I'll be watching for any potential snapback rallies. What's this? So many people on X have been pumping XRP, Ripple, especially if the ETF announcement is currently down 34% on its high on January 18th and down. Yep. Yeah. Ripple is getting the south, but remember, Bitcoin, there is a massive potential double top in there too. Again, you'd need to follow through with a weekly close below 89,000. But there is that potential massive double top in that. Ethereum also got blasted, but a little snapback there. But look at Ethereum between Friday or Saturday, Sunday, and today. Snap back a bit, but it took it back to levels in September in 3 days. Again, lots of volatility in crypto. So Ethereum took off what do you mean Ethereum took off last week? I'm confused. Where's my Ethereum? Ethereum started drop. Well, it bounced for a couple days but it did not take out any key highs, and it lost its key lows from the middle of January over the weekend. So you're getting lots of liquidation in crypto, but Bitcoin has not triggered the massive double top pattern. Tesla, key thing I'm watching to see if we finally get the close below the 50 EMA, which is roughly 385. Remember, the little double failed without even hitting the first target. Then we rolled over and was trying to hold this 50. But if this 50 breaks, I'm watching for back to the 315 area at a minimum. NVIDIA, still, let's see what would invalidate this little mini potential double. What would invalidate it? Would be if we get below 113.07, the little mini potential double bottom, which is now against the daily rotation zone and against very key resistance, would be not triggered. By the way, 114.10 is what I'm watching for a key close. Why? And my first target for that would be 106.30. Why 106.30 instead of the 87.5 at this 98.50? Because we do have this channel. You do have this channel, and that's where the target would be for me for at least another potential minor bounce and then a rollover to the 87.5. Broadcom, another one coming back to key resistance, closing above it, interesting enough, on Friday, but now the gap down, and there is a potential gap fill back to 206.35. Earnings coming up in Palantir. Remember, earning up after the close. This is going to be interesting. Don't know how these earnings are going to turn out, but remember, very richly valued at P/E of 411. So this is priced for beyond, even if they beat. So that kind of valuation, they'd have to crush earnings. Now, they are might never trigger. But interesting enough is there is a potential double top. and that could trigger with the rotation zone out of the way. So 63.40. Other than that, the key on a beat with harmonic, with a beat in their earnings, would 90 is the key level, and then 99, so roughly 100. 90.28 and then 99.66 are the targets should it just get bought up with earnings. But we also have a first of a divergence on here. It made a higher high with a lower high, so we're going to see how this plays out in earnings. It's going to be very interesting. I'm back in a position on X. It triggered a daily double bottom on January 13th. It's still a bio candidate and stands to benefit from tariffs. Okay. I mean, you have this after hitting the second target on the double top, triggering the little very volatile double bottom. By the way, if you haven't raised a stop, I definitely do that if you're playing this alongside. But could this return to 40.75 in the gap fill? Yeah, could potentially. Dark screen saying gold is overbought on the monthly chart. Let's see. I'm still watching because we triggered a continuation long-term buy. Gold on a monthly. If my levels come up. Also, gold on a monthly, yeah, but it was more overbought now. Returned to the double top area. The only thing that would put a kibosh on gold is a close below November's lows. That's the only thing, because we got monthly cycles also at the bottom. Now, there will be a top in gold, but we don't have the major topping pattern. You also have the weekly double top. So again, that's from November's lows. If that were to trigger, then I'd be watching for a substantial pullback in gold. Other than that, the trend is still up in the long term. So, all right, let's see how the market's opening with the tick. Market again, your 59.85 level is going to be very key. The tick opened minus 1400. That's better than I expected, but still. Going to be watching now for the snapback rally and then the next rollover play in the tick. If the tick does not push back down massively lower and we hold some key support levels, I'll be watching for those to continue to hold. So going into the open now with the tick bouncing still 59.85. The only thing that would turn me into watching for more downside is if we start breaking this 59.61 area, 59.62 area with a declining tick, meaning a deteriorating tick. If we get back into buy the dip mode, remember, I'd be looking at around 59.96 as a first key target, and then the major target is just above 6,000, about 6,015. Yeah, I wouldn't short that off the open. So that's where we sit for now. I hope everyone has a wonderful, wonderful trading day. Until then, remember, if you don't have a setup, and be prepared for volatility. When I'm this way, from my perspective, I keep wider stops and smaller position sizes so I don't get shaken out of trades because of volatility. You can get now, so keep your stops where your trade is invalidated. Know what invalidates your trade, and that's where your stop level can be. And if you can't get good reward to risk, you pass on the trade. There'll always be another market to trade. There'll always be better, easier times to trade. You don't need to force anything right now. With that, I shall talk to everyone tomorrow. Bye for now.